Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by returning guest Lobo Tiggre, who is the author of Independent Due Diligence Reports at the Independent Speculator. Lobo, great to have you back. How have you been keeping?
Pretty good. It's been a great year for me, and I bring your audience as well. So lots of fun things to talk about.
No, absolutely. We were just saying off air, it's been about 11 months actually since we last spoke. So, yes, there is plenty to talk about. And I thought the best place to start would be just to remind people why we have physical gold. And we'll dive into gold, silver, uranium, and copper and so forth moving forward. But I think a good place to start is that 30,000 foot view, why people do own gold, and if people are listening and they don't own gold, why they should look at possibly having a position in physical gold itself.
Oh no, scratch the possibly. You're being too mild there. And this is not me saying, "Oh yes, go out and buy the all-time high." That's not the point. This goes back to something that my old mentor Doug Casey really pounded into his readers, and it's a number one Caseyism, and that is that the reason to own gold is prudence. It's insurance, it's real money, it's savings, it's physical value you can hold in your hand that you can be long for which there is no short, and governments can't print it. So it's a completely different thing from speculating or even investing. The gold stocks are speculations. We buy those because we're seeking alpha, right? We're looking for hockey sticks, which we happen to have a few of this year, as we were just saying. That's about making money. The reason to own gold is to not end up in the poorhouse. It's a very, very different thing. So if you don't have any gold right now, okay, maybe don't rush out and buy it on an up day, but markets fluctuate. There's always a down day. And having some, and by the way, silver serves this function as well. And it's not yet at all-time highs, even on a nominal basis, let alone an inflation adjusted basis. It is prudent to go out and make sure that you have um, some physical bullion in your direct control. And by the way, I'm not even throwing Bitcoin under the bus here. It's untested in something like the GFC or 1929, but who knows? Maybe it'll work. I don't know. But if the power goes out, you still have problems with that. Whereas physical bullion, and that's one reason to include silver here, is you can make change with it. In worst case scenarios, this is physical value you can hold in your hands, and it's universally understood and it's accepted around the world. So it's a very different thing. And the reason why I think this is important to remember right now is we've got a lot of complacency, not just on Wall Street, but really sort of around the world that, okay, Trump shock was this big announcement on so-called Liberation Day on April 2nd. And it was all, bluster. And now the worst is behind us, right? We understand, you know, the Trump agenda now. So it's, whether we agree with it or not, okay, the worst is behind us. I just don't think that's true. Okay, maybe the peak bluster is behind us, but even that is not a sure thing when it comes to Trump. Nothing is sure. But the actual reality is now working its way into the economy. And okay, a lot of deals are for 10% tariffs or less than the shock and awe on April 2nd, but some are higher. And we've got secondary tariffs now. And by the way, that war did not end in a day. So um, there's just a lot of really serious stuff going on in the world right now. We have, the war in the Middle East. The best thing we can say is that Iran got bombed and it didn't result in World War III, but that's not over either. And of course, Putin shows no sign whatsoever of having any interest in ending the war there in Ukraine. So we've got hot wars going around in the world. We've got this whole new tariff regime, which, love it or hate it, is a game changer. It is transformational. Trump is trying to retool the United States economy, and that, sorry, but that affects the entire global economy as well. So these are very important major shifts happening in the world right now. And the reality, as these things percolate into the economy, is really only beginning to be felt. Ironically, Fed Chair Powell just told us there's no painless path forward from here. And for once, I agree with him. So, sorry, long answer, but I'm just reminding, I'm not saying the world is going up in flames tomorrow. I'm not saying markets crashing tomorrow, but we are in that kind of environment where sudden negative extremes are possible. And at the same time, we've got irrational exuberance on Wall Street. So I think this is a good time to remember, your question is very apropos. This is a good time to remember that, fine, we're making money on gold stocks, great, but that's not why we own gold itself.
I know that I've seen a lot of rumblings around on social media, and people would look instantly at the gold and silver price. Let's call it 3,750 and $44. Roughly, that's what it is when we're recording. People will look at those prices and they might think, oh, that's a bit too expensive here. I think it would also be worth reminding people that, and again, this isn't financial advice. We're not saying, go out and do whatever, but it's also worth reminding people that potentially in both gold and silver, there's a lot of room to run, and just for the reasons that you've just outlined. Is that a fair thing to say to people?
Yes, though there are other reasons for them to run. You've got central bank buying, we've got portfolio reallocation starting to happen. Rick Rule's famous thing about the long-term mean being a 2% allocation and the recent allocation only being 0.5% to gold. I think that actually may have shifted already. You look at Bloomberg or Yahoo Finance even, or mainstream financial media, and gold has become a crowded trade, at least at the institutional level. The money managers, people, it seemed like they couldn't even spell gold a year or two ago, and now they're all talking about, it's not their main thing. Well, there are a couple notable exceptions, but the mainstream, it's not everybody's, yeah, this is gold mania. It's just, oh, we're doing this, we're doing that with Nvidia, we're doing this with pot stocks. Oh, and we're hedging with gold. And it seems like everybody's doing that. So that that 0.5% might be 1% already. I don't know. Nobody knows in real time. But I see these things happening. So this is more wind in the sails of gold and silver. But the tail risk that we're talking about is more like if something really bad happens. And okay, yes, you can look at 37, almost 38 recently on gold and $44 on silver and say, well, gee, that's not cheap. But how expensive would your fire insurance be if you tried to buy it after the house was burning? Again, when you're talking about safety, when you're talking about wealth preservation, the point isn't, how expensive or cheap is it? It's, do I have it or not, and what are the odds that I'm going to need it? Is a very different calculation. A personal story. I remember I had a student uh, many moons ago who got interested in gold, and I don't remember exactly where we were at. I guess it was pre crash of 2008, and I happened to have some gold on me, so I exchanged it for $1,800 at the time. And then GFC happens, gold slides to 2015 after all this stuff goes up and down. So no, it wasn't 2008. So the peak of 1911 was in 2011. So it must have been early 2011 when I exchanged some gold for actually euros at the time. And then this big downturn happens, and he had a financial difficulty. And so I was traveling through the area again, and he asked me if he could sell me or transfer back some of the gold. And I felt really bad. I felt really bad because at the time it had dropped to like 12, 1,300 or something. It was close to the bottom. But he really needed it. He had a Russian partner had disappeared with goods or services or something. And so like he was in a crisis mode. And so on the one hand, I felt bad because I transferred to him for 18 and I took it back at 13 or whatever it was. On the other hand, he really needed the money. And that's what gold is for. It's, you're not worried about whether it's up or down. The point of the story is, okay, he took a loss, but he got the liquidity that he needed at the time that he needed it. And that's exactly why we own it. Like, other things could have gone to zero. Gold is always going to be worth something to someone. And even if you're in the East and somebody will recognize it. So that maybe, I don't know, maybe I'm being long-winded old wolf here, but I find this to be instructive. And by the way, he didn't sell everything. He held on to the majority. He just sold what he needed when he needed it, held on to the rest. And guess what? 1800 now looks cheap compared to where we are now. So for the long-term view, what he did was not silly. And he bought just before the peak in 2011. So that's what I would tell anybody who's worried about high prices today is, what's the price of insurance at, when you don't have it.
Yeah, it's a very good way to put it. And I'll just add to that as well, start with the end in mind. And, you can do as much research as you want, but ultimately, there's what, 5,000 years of history, give or take with gold, that it speaks for itself, to be honest.
Good point.
Lobo, in terms of that's a 30,000 foot view. So thank you for going into that. And I think that sets the scene nicely. Just looking at what we could talk about now, obviously the miners are starting. I don't want to say they're ripping and be too hyperbole, but there's been some fantastic movements recently. So how would you summarize and analyze what's been going on in the mining space, specifically with gold and silver recently?
Yeah, well, here again, I want to be careful because people haven't seen this before. It's like, oh my God, it's gone vertical. Maybe I should sell, right? Um, but if you have seen this before, you know that, well, it's a form of markets can stay irrational longer than you can stay solvent. So if you're a bear, that's something for you to worry about now, because just because things have gone vertical doesn't mean they can't go even more vertical. And people who've only been in this for, even 10 or 15 years, they may not remember the last time, or even if you were there when gold broke out 20 years ago, we didn't have these kind of gains. And even the peak in 2011, it never had a mania phase. There was never a retail mania there. So you'd really need to have the memory of a Doug Casey or a Rick Rule. I was there at the previous peak in 1980, but I wasn't buying gold stocks. I was the shoe shine boy or the lawnmower boy who was buying physical silver at the time. But I remember what the mania was like. So I'm trying to be careful here because on the one hand, or paw as the case may be, since Lobo means wolf, on one paw, if you've got a veritable mania going, and gold hitting 4,000 could be the sort of thing that just, sets off the fireworks here. Um, you ain't seen nothing yet, is what that means. You think that they've gone vertical, you think everything has gone crazy lately. Well, that's nothing compared to a bona fide market mania and these sorts of things. Like think meme stocks. That's what this looks
Mhm.
like. And I'm not predicting that. I'm not telling everybody to get a triple mortgage and hawk their kids or something and load up because it's going to the moon. That's not what I'm saying. I'm saying that if we get that kind of market mania, that yes, that is still ahead of us. On the other hand, that may not happen. Gold and even gold stocks have competition now that didn't exist before, like in the cryptos. Again, quoting Doug Casey, he used to say that we like betting on these crappy little mining stocks because they're the most volatile. And so when they go ripping, they really go ripping. Well, they're no longer the most volatile securities on earth. Cryptos fluctuate more in a day than right
Mhm.
than mining stocks might in a month or a year or something. It's so there's real competition for people seeking alpha here. So it may not repeat. So gee, Lobo, you're not helping us. You're telling us it might go up and it might not. Well, I'm answering the question. So if you're afraid that, oh, it's gone up so much it can't go up anymore, well, that's wrong. History tells us it can. So what do we do with that? My answer is it's a strategy. I call it the upside maximizer. Like I'm not smart enough to know where these things are going to peak and when they're going to roll over. A lot of people will tell you, oh, my secret Fibonacci formula, blah, blah, blah. But really, nobody knows. So what I do is I use something like a trailing stop, but it's not a stop loss. It's a stop gains from turning into losses, right? I keep ratcheting it up. And then when things turn over and the math says this is excessive volatility, well, then I take profits or sell. And that way I don't have to know when the market tops. My upside maximizers, I set triggers. When I get triggered, I sell or take profits, and then I can't lose, right? So if the
Mhm.
market rolls over on me, then I get my money back out of harm's way and maybe some winnings too. So that way, if you don't mind me saying so, that's a free report on our website. Just look for upside maximizer. It's in the free report section. And there are a lot of ways to implement it, but the main idea is just, you know, bulls and bears can make mistakes, but pigs get slaughtered. Don't get greedy. Don't be afraid to take profits. Nobody goes broke taking profits. And when you don't know where the market's going to go, don't try to time the top. Just remember, nobody goes broke taking profits.
I think that's very prudent information, and I'll make sure I put a link to the upside maximizer in the post that comes with this as well. Not a problem there. I think that what I find, and I'll go back to that point of having at least having a plan or having an idea, because again, doing this podcast and writing the posts and so forth, people say, well, we can have six-digit gold, we could have five-figure gold, silver. I've had people on that say, well, the math says $300 silver is going to happen, or $100 silver. People say $500 silver. So I think that having an idea of what an exit strategy would be to yourself is probably a good idea. That's why I keep coming back to that plan, because different things are going to work for different people.
Absolutely agree. Plan your work your plan.
I couldn't have said that better myself. I like that. That's fantastic. Lobo, moving on to copper and uranium. Let's start with copper, because there's big news coming out of copper in the last day or two. Just for time's sake, we're recording this Thursday, the 25th of September, and there's quite a big piece of news coming out of the Grasberg project. I think I've said that properly, in Indonesia. That's closing down, and we've seen the copper price uh, shoot up a little bit. How is that going to impact the copper market moving forward? I know this is something you're very bullish on in the long run. What are your thoughts on what's happening over there?
Yeah, so this is actually a big deal. I don't normally discuss specific companies. I don't, people pay me to evaluate companies, and I don't want to give away what they pay for free. But this affects the whole industry. So it's not like half the world's copper has suddenly disappeared. The company's guidance is for 4% less of the company's output. But now this is the second biggest copper company in the world. So that's a significant, prices are determined at the margin. So that's a significant impact there, just that alone. The thing is that we really don't know yet exactly what's going to happen here. We don't really know what the nature of the problem is. Almost 1 million metric tons of wet material suddenly floods your production levels. So that alone is a major problem. Stopping it, cleaning it up, getting back to work could take a very long time. But why did it happen? That's not clear yet. If it, this is a giant underground mining operation. They're using block cave mining. This isn't like, mining out this little vein. This is
Mhm.
blasting huge volumes out from underground and then scooping it out from the bottom. What if the rock here is weaker than previously understood and it can't take that kind of mining? I'm not predicting this. I'm not saying this. I'm saying we don't know. But the worst case scenario here isn't just, oh, we lost some time and unfortunately some lives, but we can get back to work. The worst case scenario here is that a dramatic change of mining method might be required. And you might have to write off very large amounts of reserves and resources in the ground if they can't mine it the way they thought they could. So the degree of outcomes here, there's a wide variety. But the most benign one is actually a significant change to the global copper market. So, um, you know, now do I want to rush out and buy copper stocks today? I'm still thinking about this right now. This is fresh enough in my mind that I'm still thinking about this. I have been very bullish on copper already. In fact, copper was my top pick for mineral or metal for the commodity this year. But it wasn't because I knew this was going to happen. Obviously, mining accidents happen, but something this big is pretty rare. And this is not some fly-by-night junior that screwed up. This is one of the biggest invest mining companies in the world, adhering to international standards and so on. So this is a lightning strike type event. Takeaway for the audience is, uh, if I didn't own any copper stocks, I need to look at it. There is reason to be not just gung ho. Yeah, this is it. Copper's going to the moon now. in that what we were talking about earlier, the Trump shock still working its way into the global economy, that's actually bearish for copper. Dr. Copper, the PhD in economics, if there's an economic price to be paid for the transformation that Trump is attempting, I think surely there must be at least some, that's near-term bearish for copper. So this makes me reluctant to say, yeah, this is it. The marginal pound has just disappeared from the market. It's going higher forever. Buy, buy, buy. That actually could happen, but it could also be that this other pressure holds it down. I will say, you know, I think the smart players out there have seen the Trump shock coming, and copper has still held up pretty well despite that in advance. So I already have a copper shopping list I'm working on. I'm
Mm.
thinking now about whether I want to move forward on executing on it. Uh, Obviously, my clients will be the first to know, but this is a big deal, and it's definitely something to think carefully about. And I think playing this right could be foundational for making a lot of money in the years ahead.
I thank you for commenting on the company and the situation itself. As I say, I know you don't normally do that, but given the magnitude of that news, I'll put a link to a news article in the post as well, just if
Sorry,
people are
real quick.
interested in the first time.
Sorry, just one real quick addendum, Robert. And then that is, it's not the only one. Hudbay also had problems. You know, this is a bit of a pet peeve of mine, but bear with me, audience, because I think this is a takeaway as well. You have all these projections of supply and demand, copper or any other commodity out there, and it includes these forward projections of, oh, this company's setting up, they're doubling production at this mine, or they're closing down that one. And so they put all these things into their models and they make these supply and demand forecasts. Events like what we're talking about are never in those models, but they seem to happen every year. Like if it's not a natural disaster or a sinkhole opens up, then it's a nationalization like Cobre Panama or something like that, right? I'm hard pressed to think of a year where there was no disruption to copper supply. So this is an extreme case right now. Year's not over yet. But remember this, audience, when you see people say, oh yeah, the market's in balance, if they say that it's in balance, it's likely to be in shortfall. If they say there's going to be a copper surplus, then maybe it'll be in balance. They never can model these things.
I think that's in all walks of life, always having some form of backup plan, plan B, or at least a contingency is suitable. And it sounds like what you've just said there is they do not plan for any contingencies or any incidents or issues. And this is what leads to these issues within the market.
Yeah, well, it's understandable. Like, how do you plan for something like this thing at Grasberg?
Mm.
I don't know. Maybe you could do an arbitrary, whatever supply we think it's going to be this year, we're just going to cut 1% off because of the random acts of nature and governments. But that's going to be wrong, and you have to defend it. So I understand in a certain way, but the bias to do nothing, I think, doesn't serve investors well, because there's mining is a difficult business at best, and it's a
Mm.
danger. It's often fatal. Like if you ever go underground, you always have in your mind, gee, if anything goes wrong here, I'm in real trouble. That's the nature of the beast.
I'll go back to my previous comment of saying thank you for at least making a comment. I know you don't normally do that, but given the magnitude of the situation, thank you for touching base on that. What we're talking about before we go on to uranium, actually, just looking at supply and demand in general, because I've had a few other guests on the podcast recently who've just pointed out that basic supply and demand, whether it be in silver, oil, natural gas, copper, in this extent, if you just look at the supply and demand, it's all favouring potentially higher prices moving forward. It doesn't matter what industry you look at. Is that something you would agree with? And if not, why not?
Overall, yes. But it depends on your time frame. And obviously the different commodities are different. So it absolutely depends on your time frame. In the near term, I think it's actually, never mind accidents like Rosberg, but economically looking at Trump shock and the global economy, I think that's bearish for copper, oil, and generally industrial minerals. The same thing is bullish for monetary metals, safe haven assets. Longer term, though, basically, the Trump agenda is highly inflationary. Europe rearming is highly inflationary. Russia's war is highly inflationary. China's battling deflation, but they produced all this stuff that suddenly didn't go to the United States, and they are trying to stimulate the heck out of their economy. I think ultimately the printing press wins everywhere. There's only so much you can cut, but there's no limit to how much you can print, as Zimbabwe reminded us all not so long ago, right?
Mm.
So basically, I think to your question, the global mega trend right now is inflationary for a period of several years, and that is bullish all commodities. But if you pull back and look at an even bigger picture, the the energy build out for AI is going nuclear, and that's a
Mhm.
good thing. If we build out nuclear capacity, we might actually see the era of abundant, cheap energy that we imagined initially back in the 60s and 70s when the first nuclear build out was happening. That world that we imagined in the 60s and 70s, that's what led to the world of the Jetsons that we imagined, where George Jetson's job was to sit there and push a button.
Mhm.
Right? That was hard work for George. And it was enough for him to have a nice high-rise apartment, flying cars, and all that stuff, a vacation on the moon. If and that transforms everything. If you have super abundant cheap energy, you can get all the minerals you want out of the ocean, right? And by the way, for green types who don't like carving holes in the earth to get minerals out, you should be strongly pro-nuclear if for that reason alone, that you can mine the ocean. And by the way, you don't even need to disturb the seabed. You're just processing water and getting the heavy metals out. What could be better than that? Clean up the ocean, right? And make money at the same time. So the bigger picture, the ascent of man, if you will, is actually a bearish case for commodities. If you look at commodities prices over the millennia, they
Mhm.
get cheaper and cheaper and cheaper as technology and our own prowess goes forward. And think of the lifestyle of kings a couple hundred years ago. A poor person now in a first world country has a lifestyle vastly superior to the kings and queens of a couple hundred years ago, if only because they have access to medicine and dentists. But air conditioning and cars are good things too. So the bigger megatrends, and sorry, okay, nope, most investors don't have 1,000-year investment time frame, but over the decades, things change. Like this energy thing that we're talking about, that can change things within our lifespans. My friend Doug Casey is talking about new carbon-based conductors that could actually give copper a run for its money in the future. Aluminum replaces copper in a limited number of applications now, but not really. Copper is not substitutable in its most important applications. That could change in the future. It's not something that I'm worried about in my investment now, but I'm just saying disruption doesn't only happen in IT. It happens in the physical world too. Um, so it behooves us all to keep an eye on the future.
I think that mentioning timeframes there is very important as well. Yes, I imagine that no one listening to this is going to be having a 1,000-year time frame, but certainly, as you say, short to medium term, 10, 15 years, things are quite favorable. I'm wondering, Lobo, if you could again just remind the audience, what does an inflationary environment mean? What does that mean for things moving ahead? I'm sure most people will be aware, but again, using your experience and everything, what does this mean to, or what should this mean to people moving forward?
Well, I was just the lawnmower kid back in the 1970s when that inflationary period happened. But I sure remembered all the grown-ups talking about it. And it was so pervasive that even the shoe shine boy, me, right, went out and bought silver rounds. So that's still ahead of us. If history doesn't repeat but rhymes, we are still nowhere near that level of pervasiveness. And the thing is, like, if you recall the post-COVID bout of inflation, and Powell said transitory trend, and it lasted longer and went higher than anybody wanted, and he got egg on his face for that. But you could say that actually eventually he was right. They got it back down to only 3%. But 3% or 3 or 4% is what had people rioting in the 1970s. or before inflation, I'm not talking the spikes, but the broader period of time, the levels of inflation down to now, you're still, if you don't defend yourself, you're losing 3% of your value of your money every year. That's not a good thing. That's not price stability. And by the way, 2%, this stupid arbitrary number they've all agreed on, that's not price stability either. That is a guaranteed loss of 2% every year. Why is that a good thing? It's not. So the answer to your question is, think about what would have happened if inflation went to 9% in the United States and wherever it went in other countries, and then it didn't go away. Or maybe it came down to 6% and went back up again. And it was much more persistent and difficult than anybody imagined it could be. That's what we remember from times in the past. And people who live in other countries where the solution, they never get a handle on it. The solution is to lop zeros off the end of your currency and give it a new name.
Mhm.
They know what I'm talking about. This, and there is a chance that we are in that situation right now. Well, actually, it's not a chance. If you look at the purchasing power of the dollar and you compare what a dollar could buy 100 years ago to what it can buy now, or even just 20 years ago, if you were a millionaire just 20 years ago, that's that being a millionaire now is being like half a millionaire, like literally half, $500,000. So imagine that accelerating and then staying. That's the key difference, is that the powers that be persuaded everybody, oh, it's just COVID. The COVID recession, disappeared in a flash, and they managed to convince people, and they managed to bring inflation down from 9%. But what if it goes back up again? If what I'm talking about, it's not, this COVID lockdown, it is an agenda. And it's not just Trump's agenda, the wars and the rearmament of Europe, all the stuff. We're talking about many, many years of pushing the world in this direction. And by the way, even if the spending stops, the deglobalization, the fragmentation of the global economy imposes higher costs. And that is a one-way door that sticks, that inefficiency of not having global supply chains or less global supply chains. The more we harden our economies and have, domestically resilient economies, the higher the cost.
Mhm.
So maybe inflation doesn't go back to 9%. Maybe the cost of all these things that I'm talking about, it's 4 or 5%. But if you have 4 or 5% inflation and it doesn't go away, and none of the Fed's tools seem to work or make it go away, that's the kind of thing that gets people out on the streets.
Very dangerous times if people aren't paying attention or at least studying what's happened before to what, as you say, could potentially happen again. Uh, also links into what you said at the start, really, about the 30,000-foot view of why people would want exposure to gold and silver, but also that, as you coined it, the irrational exuberance on Wall Street as well. There's plenty of moving factors here, plenty to
So that
pay
was Alan
attention to.
Greenspan.
Alan Greenspan, fair enough. In terms of so we covered inflation, looked at gold, looked at silver, looked at copper. You've mentioned a bit about uranium as well. Obviously, a lot of people are very happy with how their stock portfolios are doing at the moment. Are there any other areas, anything else you would like to bring to the viewers' attention?
Yeah, but before we move on from uranium, I think it's worth pointing out that there's a knee-jerk reaction, and you'll often see it in the spot price will wiggle when there's bad news for the economy, which is bad for energy, right? And so oil will drop, and the so-called energy sector will drop, everything related to energy will drop, and sometimes that affects the spot price, but not always. And the one thing that I want to make sure everybody knows, and if you've heard me before, you may have heard this before, but forgive me, because for those who haven't, this is important to understand. In 3 of the last 4 recessions, uranium prices went slightly upwards to upwards. Like the worst performance was kind of side-ish ways, but slightly up, but to be fair. But in a recession, that's actually an outperformance. And compared to oil and other energy sector assets, it's a stellar outperformance. And in the fourth one, the one where uranium went down, it was the Great Recession. But uranium had peaked in 2007. It had spiked to
Mm.
$140 a pound, came screaming back down before 2008 hit. And it continued lower. So arguably, that one time that uranium went down in a recession, it wasn't because of the recession. It was because of idiosyncratic reasons that had been triggered the year before, right? So what I'm saying is the data suggests to us that uranium is highly recession resistant. It marches to the beat of its own drummer. And that makes perfect sense because nuclear energy is baseload power. It's the kind of thing you want to run hospitals and airports and where you don't want a lack of wind or sunshine to cause a brownout or a blackout, right? So it's basically like the difference between discretionary and non-discretionary spending. You're 24/7, 365 power. That's what you want nuclear for. You've got to have uranium. You know, the Back to the Future Mr. Fusion thing where you could pour beer and banana peels or whatever in there and get nuclear energy out. That doesn't exist. And yeah, someday I think thorium may well eat uranium's lunch, but that's decades down the road. Right now, it's uranium. There's no substitute. And the point I'm trying to make for anybody that doesn't know this is it's highly recession resistant. So whereas, if I'm bullish on oil long term, but I'm worried about the economy in the near term, I probably don't want to load up on oil. It's different for uranium. If there's a dip, the only problem I have with uranium right now is that we did have a correction, and the bull case was so obvious that the stocks didn't correct that much. But markets fluctuate. If you remember that DeepSeek thing that came out of China and
Mhm.
scared everybody, suddenly everybody's, oh, we're going to have energy efficient AI, so we don't need all this extra energy. And energy prices tanked, and uranium stocks tanked on that news too. It was stupid, you know. It was the bull case for uranium had nothing to do with AI in the first place. The fact that AI gives it a tailwind is great, doesn't take away the bull case, and having a cheaper AI process that only means we're going to use more AI, not that we're going to use less energy. So that was a phenomenal buying opportunity. It so far this year, it's been the last great buying opportunity that we've seen for the uranium stocks. But Mr. Market is a cycle. We might have another thing like that DeepSeek moment. If it happens, I would absolutely see that as a buying opportunity. If there is, a near-term economic shock, if copper and oil go down and that drags uranium down with it temporarily, I would view that as a buying opportunity for uranium before the others.
I think that works again hand in hand with what we've both said throughout this episode is have that plan in your case, have those stop losses and have these mechanics available so that you
So
are
when it
in an
happens, you're ready and you
advantageous.
can act.
Exactly. No, 100%. I appreciate that, Lobo. Again, just going back to the previous question, given the multitude of areas that you do look at, is there anything else you'd like to bring to the viewers' attention before we wrap up?
Yes. Um, Rare earths and critical minerals, we throw around these words. Some high profile people on television don't even seem to know what they are when they speak about them. Remember that rare earths is a misnomer. They're not rare. Lithium, it's right after hydrogen on the periodic table of the elements. It's very abundant. And there's a lot of hype about this. Governments are all getting the memo of you need to have some resilience in your supply chain. Just today, there's a G7 announcement about subsidies. They haven't announced the subsidies, but they're looking at subsidies for rare earths to put a floor under rare earths. And frankly, that might be what it takes. And so you'll see stocks. I won't mention the name. One lithium stock doubled yesterday as we're speaking because the United States government announced that they were going to buy in. Why should that make the stock double? When has government ownership or a semi-state owned company been focused on delivering profits to shareholders? Right? The fact that the United States government is going to buy into a company, okay, if they were out there buying on the market, and maybe that would push the shares up temporarily. So if you're trying to front run the government as a buyer, maybe that makes some sense. As far as the actual business of making money mining this stuff, it's a red flag. Government involvement is never a good thing because they want the lithium, whether you make money or not. And it's not at all certain that this government buy-in will be on the open market. Maybe it's like a private placement, a public-private placement. Sounds kind of fascist, but anyway, maybe. So, but the point is that if they buy in at a set price, if the company issues new shares, and I don't know how this is going to happen. All we have is an intention right now. if they buy at a set price, anybody who chased the stock up because the government was going to buy and they wouldn't care what they paid, they were wrong. And so you'll see headlines about rare earths, lithium, or any other critical mineral. Just beware. Government involvement is not necessarily your friend. And okay, yes, that's good for securing supply eventually. Well, that's another thing. The government's going to provide subsidies for rare earths. Even if you had a shovel-ready mine, it will be years before you get any of that stuff out of the ground. And there's very few shovel-ready mines, especially in rare earths. They're common, but they're different. I mean, it's not one metal, it's a whole suite of them. They come in different mixes. It changes the chemistry. There's no off the shelf, here, this flotation circuit will get your rare earths out. It's not like that. Each one is highly individual. You need to fine tune the chemistry, and you really usually don't find out until after you build the mine what it really takes to get it to work right. So just buyer beware, caveat emptor. All these announcements about government involvements in these things, they're at best a mixed blessing, and they're absolutely not a reason to assume that share price, if you're speculating on share prices, it is not safe to assume that, the government saying we're from the government, we're here to help is going to make your share price deliver for you.
I'd add on top of that, and I think a lot of people that watch and listen to the Contrarian Catalyst are skeptical about governments anyway. It's fair to say that probably most governments aren't out for your own interests, they're out for their own interests. So I'd just add that as well. Lobo, it's been a fantastic conversation as it was last time we spoke, but please do tell people how they can get in touch with you and find your work and follow yourself.
Sure. Well, thank you for that. Independentspeculator.com. We have a free weekly publication called The Digest. Give that a try. You can see how I think and whether you might consider hiring me to be your due diligence guy through my paid publications. The Independent Speculator is about what I'm doing with my own money. If you want to know what's Lobo doing, that's the place to go. And then we have one thing called My Take that I think is really quite misunderstood. It's not really a newsletter. It's a database. We have about 1,000 companies under coverage now when we take requests from clients. So you can sort and slice it. If you want silver, junior producers, not majors, and not in Bolivia, you can sort for that on the database or, any other mix that you want. So I think it's a phenomenal tool. I have seen people at mining conferences with My Take on their iPad running around asking companies all the obnoxious questions that I would ask. So check it out.
Perfect. I'll make sure I link to them in the post that comes with this as well. And again, thank you very much for your time. It's been another fantastic conversation and look forward to catching up in 2026.
Thank you.